Hi, my name is George Stagnino. I'm the editor of the Peter Dack Portfolio Strategy and Management. The purpose of this video is to answer the question, is this a bull market? And if it is, how long will it last? As I mentioned in previous videos, I told you that there are two major forces that are acting right now. There is the Federal Reserve that is tightening and trying to control inflation and slow down the economy. At the other side, instead, there is the administration and Congress passing one program after the other, throwing trillions of dollars into the economy. And of course, this is cash that is being goes into the banks and then is being used to buy stocks, among other things. So the purpose here is I would like to show you what is happening in the economy, then see how this applies to the business cycle. In other words, where are we in the business cycles and what kind of investment are more profitable in that particular phase of the business cycle. And that's so you know what the strategy is and how long, if this is a bull market, how long will it last and what will happen next. And roughly give you a rough time of what to expect. The business cycle shows the performance of the economy when start accelerating from a period of slowdown. Then here's when growth is too fast, we're actually very fast, so that interest rates and commodities and inflation start rising. This is the beginning of the slowdown because rising inflation decreases the purchasing power of consumers. This is when inflation, interest rates, commodities, everything declines until people feel comfortable again, and then the cycle starts all over again. The investment strategy in each of these four phases is totally different. So it is very important to understand where are we? Is the economy growing? Is we are getting into a recession? What is going to happen? So this is the purpose of the following slides. This is the business cycles that we computed from market data. This is a period of stronger economy, slower economy, stronger economy, slower economy. The investment strategy during a period of stronger economy is totally different, as I will show you later, from the period of weaker economy. As you can see, there have been 1, 2, 3, 4 business cycles since the end of 2009. Now we are now here and there is a spike up suggesting that a new business cycle is underway. So let's look at the data now and see if that is the case and what does it tell us about the position on the how far are we from a peak so that we have to change investment strategy. That's the whole idea of this video. This is the reason, the only reason I can find of why the stock market and the economy started strengthening since the fourth quarter of 2022. These are various measures of liquidity. As you can see, it's increased during and after the COVID crisis, then the slowdown, and now since the fourth quarter of 2022, liquidity started increasing. It's absolutely not a coincidence that the economy, the stock market, the financial markets change their tone. So let's see now what is the effect of this increase in liquidity, which keeps on continuing to go up. And let's see what is the effect on the economy and on the markets. And then again, let's put it in a context of a business cycle. The gigantic stimulus for infrastructure spending, it can be seen in this part of the data, which means construction shows that construction picked up in the fall of 2022 and just going straight up, both construction. This is a very important sector of the economy. That's why the administration spent a lot of money in this area. And the point to be made is that construction spending declines before a recession, before a period of slowdown. So the fact that construction spending is going straight up, this means the economy is gaining strength, not weakness. This is also an important trend because it's after inflation. And you can see income and spending after inflation has been rising steadily and then now is positive and is at a level consistent with long-term trends. So this is consumers are finding increasing purchasing power, income is rising, so this is good news for the economy. This is also good news. Unemployment claims have been declining, remain stable, and now they're declining again. So this means employment is strong and people are making money after inflation. So this is very good news. Another important piece of good news is that wages after inflation have been rising and now rising in positive. They're in positive territory, meaning that workers are making money after inflation. This is very good news and shows that, like in the previous cases, a business cycle that is expanding, and so consumers have increasing purchasing power. This is very good news. The change in heavy truck sales is a superb indicator measuring the business cycle. Look how nice it is here, rising, slower economy, stronger economy, weaker economy, stronger economy, weaker economy. And now look what is happening in 2022, started stronger heavy truck sales. So this is telling you the economy is expanding, business needs truck to transport raw materials, commodities, equipment, and everything else. So this shows us the economy is on a sound footing. The most important sign that the economy is strengthening is what is happening to commodity prices. And this is the commodity price, the CRB, and you can see it was weak, but then beginning in 2022, it started bottoming out and now is solidly going up. So this is a sign the economy is strengthening. We saw in the previous slide that the price of commodities is going up when the economy is expanding. Well, the price of money, of the commodity money, is also rising. This is the interest on the 3 months treasury bills, and the yield is going up to now more than 5%, 5.5%. So this is another indication that the economy is strengthening. This is bad news, but this is what happens when the economy becomes too strong. Well, from what you sensed from the previous slides, that because of the liquidity in the system, the economy has been strengthening, no question about it. So how does the market responded to this improving economic condition? Do they agree with what we just told you? Well, if the economy is strengthening since the fall of 2022, we should see that the cyclical stocks have been stronger and have outperformed. And this is exactly what is happening. Technology, consumer services, industrials, the S&P 500, discretionary, and materials. So the best sectors are the cyclical sectors. So the message of the market is, yes, the economy since the fall of 2022 has been strengthening, and the bull market that we are experiencing reflect this stronger economy and stronger cyclical sectors. But wait a minute, did I say bull market? Wait a minute, let's not jump to conclusion yet. So it looks like our proprietary business cycle indicator was right. We have been experiencing a stronger economy than in 2022, 2021 it peaked to 2022, and then has been strengthening again, and correctly says, yes, the economy is strengthening. So what you see is probably a bull market. What we have experienced has all the features of a bull market. But now there is the fine point. Fine, but how along are we in this bull market? How do we place the economy and what happens to the stock market within a business cycle context? This to me is the most important part of this presentation. Let me show you. As you know, things in life are never black and white. So yes, so far we saw there is liquidity, the economy is strengthening, the stock market is going up. But there are as I mentioned at the beginning, there is another force that is very powerful, and is the monetary impact on the economy and on the market. And this is one of them, important one. We just released the data of banks tightening lending standards. The percentage of banks tightening lending standards jumped again in this second quarter. So, and when this thing happens, when there is this tightening effect, like in here, or like in here, or like in previous instances, this is followed by a recession and a bear market. So this is something that we have to keep in mind. This is the graph of the stock market, the red line. Peaked in 2021 and now bottom in 2022 and now is rising. And this is the level of the 2-year Treasury bond yields, the blue line. And what is interesting about this chart is that the peak in short-term interest rates precedes about, on average, 21 months to the bottom of the stock market. This peak in interest rates preceded by 21 months on average. This peak preceded the bottom by, on average, 21 months. So right now, the economy is strong enough to force the Federal Reserve to raise interest rates, but interest rates have not peaked yet. So we are in a point where there is a stronger economy, rising interest rates, and the market rising. So where are we in the business cycle? The next slide will give the final answer. This is the business cycles, as I said at the beginning. This is when the economy gets out of a period of slowdown or a recession. This is growth, and then eventually growth creates enough inflation that the demand slows down, and this is the phase where interest rates, in commodities, interest rates, everything declines, and then the cycle starts all over again. During this period here in phase 1 and 2, the strongest sectors outperform the market. During this period, instead, the defensive sectors, utility, healthcare, and staples outperform the market. So where are we? Well, we saw the economy is strong and interest rates are rising. This is the only phase that we are in phase 2. So the economy will strengthen, will continue to strengthen, and interest rates will continue to rise until they will do serious damage. At that point, interest rates will create a slowdown in demand, and then eventually interest rates will decline in phase 4. So we are at a critical point where things might break, but there is more time still to be aggressive. And in fact, it's not a surprise, as I showed you, that cyclical stocks have been outperforming since the fall of 2022 that happened here. This was the fall of 2022. So now we are here in end of July, early August, and we are still with interest rates rising. The economy is strong, so we are in a strong pro-cyclical phase of the business cycle. The next turning point is going to be here, and we'll update you on that. I'm the editor of the Peter Dack Portfolio Strategy Management. You can enjoy free subscriptions when you go to our website here. I wrote for McGraw-Hill, asked me McGraw-Hill Education to write a book that is being published in the United States and is available also in Asia in several languages. I also wrote 2 other books that are available on Amazon.com. And all my articles and videos are found on peterdack.com and also at George Dagnino 5017. Thank you very much for reviewing this video, and I really do appreciate it. And please do subscribe to my videos so that I will gain some more visibility. Okay, thank you very much. Take care. Have a nice day. So long.